Hello and welcome to Business Edge. Well, on Business Edge today, we have 3 talking points. First, we're going to be talking about SEC releasing guidelines for private companies to raise monies. And not only that, we'll also talk about steel workers in South Africa who have been able to inch a wage increase. And finally, we will also be talking about Nigeria and India inking local currency trade deal. But of course, we'll be starting with SEC. And as we delve into the intricacies of Nigeria's financial landscape, several key developments demand our attention. From the current state of the equities market and its prospects amidst the allure of fixed income yields to the Securities and Exchange Commission's recent regulatory changes affecting private company securities issuance and the recent decline in bank share prices. There is much to unpack. Once again, welcome to Business Edge. I am Perpetua Fasamipita. And joining me for the first conversation is Nabila Mohammed, Research Analyst at Chapel Hill Denham. Hi, Nabila. Thank you for joining me again today.
Hey, good morning. Thank you for having me.
All right, so I want to begin by asking you what you make of the current state of Nigeria's equities market. I mean, can we expect any other positive trend in the market, seeing the yield on the fixed income market?
So really, currently, the Nigerian equities market has been experiencing a downtrend. If we just look at it on a quarter-to-date basis, that's since the beginning of April, we've recorded over 600 basis point decline in the year-to-date return that currently stands at 30%. Now, to put that in context relative to what the yields in the fixed income market are offering, yes, yields are elevated in the fixed income market largely as a result of the hike in policy rates that we have seen since the start of 2024. But when we look at the year-to-date performance of the equities market, vis-a-vis, for instance, the S&P Nigerian Bond Index that has returned negative 7% year-to-date, if a fixed income investor is marking to market, that investor will be at a loss. Because what these fixed income investors are really doing is that they are locking in their investments for future returns. So with any further elevation in yields, it will mean that they would record loss if they mark to market. However, if they hold to maturity, then that would be a different case altogether. But yet today, the equities market has defended 30% return, which is way above inflation. And for any positive trends that would happen, it will largely be around positive results, especially from the non-banks, if they are able to look at operational efficiency and make sure to be able to manage their FX exposures very well. And that will definitely support some positive sentiment across the equities market. But the year-to-date return still remains strong, regardless of the elevated yields that we are seeing in the fixed income market. And really, it is just around perspective, because if you are already in the fixed income market and you're marking to market, you will definitely be at a loss. But if you are a new entrant, yes, you'll be booking your high yields, and if you hold to maturities, you will definitely enjoy your return from fixed income instruments that you have in your portfolio.
All right, I like the caveat you put at the end, talking about if you've been in the market before and if you're just coming in, because a lot of persons in some securities or in some stocks are going to tell you that they are losing a whole lot. And then I'm not sure that has sort of, I'm not sure that is more than the inflation figure, because the inflationary figure is way more than 31% that we're talking about.
So when you look at inflation year-to-date, the CPI year-to-date has only increased by 9%.
Okay.
But year-to-date equities market return has done 30%. So it is above year-to-date performance of the CPI itself. That's what I mean.
Okay, great. Good to have that clarification there. Now, the Securities and Exchange Commission recently announced new rules on the issuance and allotment of private company securities. I'd like you to tell us more about this.
So, yes, true that. Last week, the rules came out by the SEC on guidance on how private companies should partake in the debt capital market. And really, what we make of it is that currently what we expect for a private company, especially those that have the potential to do more in terms of they need more funds to be more capital intensive, that their business rather requires more capital intensive investments, they will definitely look to go into the debt capital market to raise funds. And what this particular rules that has been released by SEC sort of pegs a limit on the amount that they can raise in debt capital market at 15 billion naira. And now that rule is also saying that if they want to raise more than that within 1 year, they would have to re-register and go public. However, what we know for sure is that this is still a draft, given that it has been opened to stakeholders to come and pitch in their comments and thoughts around the new rules and how to make it better, hopefully within the next 2 weeks. So we would still expect that some changes may be made to the rules, and should no changes be made at all, what we'll definitely see is that some of these private companies would eventually have to go public, and that would imply a lot of things, imply changes made to their structure, changes made to their shareholders, number of shareholders, and just allowing for more public in participation in their company. So that's what generally the SEC rules is about, largely on private companies and the impact and the amounts that they would be able to raise from the debt capital markets. Really, that's what the rules are about.
Okay, thank you. I like how you sort of did an overview of what the rules are about, and also pointing out that we require stakeholder contribution. Now, these rules actually border on the maximum amount a private company can raise, which you also mentioned. The utilization of proceeds, of course, that talks about whatever you say you want to use it for is what you're going to use it for, not for something else. And we need to also prove this. That's by putting an appendix at the end of all of that. And then it also talks about who is qualified to raise money or issue debt securities, and they will also have strict punishment. Let me get your thoughts on all this, beginning with a cap on what can be raised, and add to that the sort of maybe changes you anticipate or you would like to put in if you were to also make your suggestion.
So really, like you mentioned, those are key areas that they've talked about in the rules. And what I would say to that is that generally speaking, the private companies would definitely want to raise money, as I mentioned earlier, if they are largely capital intensive. Now, these rules have pegged the maximum amount that they would be able to raise, which is 15 billion naira. It has also stipulated clear requirements as to those who would be able to tap into the debt capital market. And we all know that private companies are one of the participants in terms of raising funds from the debt capital market. Another thing, of course, is these rules are not followed. There will definitely be penalties or punishments for these companies to be able to they would pay if they are not able to follow the rules accordingly. And what really I would like to summarize this entire set of rules is that, yes, what we are trying to see that the debt capital market improves from the current level that it is. So putting a limit, especially on businesses that are highly capital intensive, really isn't something that would favor them, especially in the short term, now that things are a bit tough and companies are looking to raise money. So I feel that those are some of the things that some of the stakeholders will be looking to clarify with SEC in terms of understanding how these private companies can do better, can raise money if they are pegged at 15 billion naira within 1 year, and would have to go public if they want to go beyond that. Because some companies really do not want to be public. And it's not as if they do not have the capacity to do so, but they just do not want to be in the public eye. They would rather be private and still run their business effectively and contribute their own quota to the entire economy at large. So there will definitely be changes to their structure, like I mentioned, changes in terms of the shareholders, because we know that for private companies, at least the maximum they can have as shareholders is 50, and even as little as 1% can start a private company based on KAMA 2020. But for this particular rule, if they would have to go public, they would have to increase their shareholders. They have to look at other appointments to their board in terms of directors, in terms of secretaries. So all these things would involve more monies being spent by these businesses when they are supposed to be using money to, push into their main business and manufacture whatever it is they are into the business of. So these are some of the issues I believe within these 2 weeks that they have given in terms of the review for the rules, the stakeholders and all other participants in the capital market will be trying to raise with SEC and trying to address and see what really is going to be the benefit for the businesses as well as other participants in the capital markets.
All right, Nabila, I'm interested in this, talking about having to re-register as a public company. At the end of the day, is it good for, who is it even good for, if these companies end up having to re-register as public companies? Is it good for the economy?
So it is a case of, if you want to be a public company, you have to go through the process. There are certain requirements that you need to meet. So if you want to be a public company, you have to go through the process. And Re-registering really is going to be very important if these companies would have to go the route of raising more than 15 billion as spec'd in the rule book. But what it would imply is that, is it good for the company, for the economy, as you asked? It just implies that these companies are going to put themselves out there for investors, both foreign and local, to take part in terms of the business that they are doing. And it will also attract more inflows if we look at it from that point of view. But as I earlier mentioned, not all companies want to go public. Some companies rather remain private. It's like a form of way, you can look at it as a form of way of managing costs and reducing and trying to be more operationally efficient by cutting costs on that front. So either ways, as far as the company is able to do their business, whether they go public or private, that would be good for the entire economy at large, because it would be that they are contributing their quota, whether they are private or public, they are still contributing their quota to the entire development of the economy. So it really boils down to the businesses if they would want to go private and public. It shouldn't be that because they have to raise funds, then they would have to go public for that in order to raise more money than the limit that has been set for them. So re-registering, if that happens, that should, in case the rules are effective, re-registering with the SEC would be very important, because re-registering implies that you are moving, you are upgrading from private to public. So you should be known as a public company, both in the eyes of the regulator and the eyes of the entire public that would now recognize.
All right, Nabila, I know there are a lot of conversations and arguments around this, with some persons saying, let's even reduce it to 10 billion naira. And some of the persons are saying, you know, when we cap it, it sort of reduces risk. So people do not just, you know, get into risky investments and all of that. But of course, I mean, the conversation will definitely continue. And we'll be looking forward to the recommendations that will be made and the adjustments that will be made at the end of the day. Thank you so much, Nabila Mohammed, Research Analyst, Chapel Hill Denham, for your thoughts.
Thank you, Mohammed.